Okay, good evening, peoples. I owe you a GDXY. All right, so on 610, let's jump in here. We went up on GDX, the underlying, 1.46. And by the way, I'll have a update on probably later tonight or first thing tomorrow morning on 611, right? Since that's already happened, the markets are closed, but I was delinquent in getting this out. Okay, so 1.46, and who says we never outperform on the way up? Well, we did at 1.75. It seemed to be the theme on 610. So no trades. So volume is very thin. Like I said about GDXY, I see it as a bull market for multiple years. Just based on the unlove, the hatred, the avoidance in these precious metals mining companies. Some of these metals are heavily used. Silver, there's a massive shortage. I don't think we've ever had 3 consecutive years where we had a shortfall in production versus demand. Mainly because it's used in so many electronics. Silver is the conductive metal, whereas gold is like a store of wealth, or it doesn't get consumed and used. It's a fear trade. It's a distrust of government, right? It's a store of wealth. It's always been the equalizers. Governments were quick to shed it because they like the printing press better, especially the U.S. having the world's reserve currency. So there's a lot of benefits afforded to that, right? So that's why there's this BRIC nation, petrodollar. There's all of this because we basically export our inflation to the world in that process. And a lot of these emerging nations struggle with that mightily. Just look at the history of Argentina, which in the early 1900s was, I think, like the 3rd richest nation in the world. It exported food, agriculture, beef. Argentina, I almost said Buenos Aires. Argentina, obviously the capital city, but the reason I bring this up when I'm talking about GDX and GDXY is that's the background, right? It's not just gold. I heard someone say the other day, oh, GDX, yeah, gold. I mean, you associate it, but it's copper, it's silver. There's a lot of other minerals. It's the same mining process that they go get lithium for electric batteries and other things. So obviously you test the source of the mineral, even uranium, the same thing. You mine out yellow cake, they call it, and that's the supply for nuclear reactors. They can't function without it, yet it's half of a percent or 2/3 of 1% the cost to run that nuclear reactor. So when the lights go out, people care. So for baseload power, nuclear is the most efficient energy in the world. Why am I talking about these things? Because I'm correlating them with the mining process. They all have to get dug out of the ground. They all have to get discovered. So labor and energy in the way of diesel typically is your big cost here. And again, as a reminder, because people ask me, why am I bullish on this? Because these minerals, right, other than really gold, like I said, gold is a fear trade, a store of wealth, something that governments hate. The more they print money, gold will, make them more honest. And I'm bullish BTC because it's the new digital gold in the sense that over time it may take a 20 or 25 year adoption for it to be just the way everything is handled. And you don't want your governments having a CBDC where they dictate how you spend your money, because there's a lot of control in currency, right? If they tell you, oh, we noticed you bought this much, we don't want you buying that food, it's not healthy for you or something. Nobody wants that kind of ominous control, and basically, unless you move to a crypto, decentralized, the way BTC has built the network and so forth, if a government alone issues the CBDC, there's some control issues. So I'm, just saying that gold has been a store of wealth, and it will continue in some ways to be there because of this war cycles, distrust in government. So it has its place, but the other minerals that get mined, always silver and gold go parallel. Somebody is called a silver miner, but if you look underneath the covers, the reality says maybe they recover 30% silver. There is no pure 100% silver miner. There are miners that produce a lot more silver than other miners. How about that? And then copper. Copper is the electrical conductor as well. You can't have copper and silver in today's world. And then there's all those specialized minerals and things that, Russia and China who, have more in their Earth's crust than we do. But okay, so I'm done with that education. So I believe that second point, minor point, and then I move. The metals themselves have risen. Gold's not far from an all-time high. It will go a lot higher. Silver is less than half of it. If you look at an inflation-adjusted silver price, it needs to go to about 90 to 120. Right, to be at an all-time high on an inflation basis. Gold has clearly been moving up and will continue to move up. But silver typically runs later in the cycle. You're closer to a top, on one of the waves when silver starts to run hard. And typically it's the last thing at the end of the bull market, which could be 5 to 8 years out. So I'm very bullish. Short term, we'll see. I'm sort of expecting something to happen the end of this week. We had the FOMC, we had the CPI. I just believe that it could have more downside in the short term. Again, I'm not investing for a week or 2 months. I'm investing where I say, do I want to own this underlying because it's bullish? Right? We could have a 20% correction in the markets, and it might pull GDX down the same as it does all the tech heavy. But I pretty much can guarantee that this thing will come roaring back. Now, am I predicting that right now? No, I'll wait to finish seeing topping signs, but we shall see. So that's my rant on this. So 175 to 146, no trades. No volume change, right? So I will get 611 out. Hopefully, I think I'll do it tonight, later. So let's move to the key things that are going to impact us. Let's look at the holdings. We're setting now, and we're doing very well on our weeklies, right? We're only a day into trading, but we know what 611 happened, and that only made this better that I report on, right? So we've captured 40% of our big guy, the 1485 contracts. We've captured almost 72% of this guy and 91% of this. So, these are further out of the money because they're 35 fives and 36 fives. What are we trading at? 3403, I think, for GDX. So this 35, we'll see. But this is looking good. But what I want it to do is really break out. I bought a couple of positions at GDXY, but I'm not going to really go in until I see it break out, because when it breaks out further, I know that the market is recognizing it. And just the metals have moved out, so therefore the miners are super undervalued. These big new mine, go look, and I think I posted the top 10 holdings of GDX, and their earnings going through the next 2 quarters should just be through the roof. Take Newmont. I think its average price of gold was like $1,900, right? So if you look at the idea here, and again, these numbers may not be exact, I'm just going off of the thought process. when you have an all-in sustaining cost, say of $1,300 an ounce of gold, using gold, then when you sell it for $1,900, you have $600 of profit that you still have things like administrative, marketing, a lot of other costs. So that, and even though it says all-in sustaining, usually that's labor and energy and all of the big things. But there can be some small costs on top of that. So let's say you're selling it for $1,900, your all-in sustaining cost is $1,300. You've got $600, and say you got some minor, you got depreciation, you got a few other things. So maybe you're making $450, $500 an ounce. And say you're now selling it in the next quarter for $2,300 an ounce. So when you're selling it at $2,300 and your all-in sustaining is still $13, now you have $1,000. So take away $100. Say you have $900 on your earnings as a percentage of your all-in sustaining cost. So you just potentially doubled your earnings. Well, that's in an NVIDIA thing, right? You look at NVIDIA and they'll say, well, we had a 90% quarter over quarter. And again, I don't have their stats in front of me and I'm not watching each quarter and, is it the data center? Is it the retail for NVIDIA? I understand their market, but I'm not looking at the numbers. But I want you to understand that ultimately earnings drive the stock market. Doesn't mean there's not some FOMO, and clearly the miners are just simply out of favor. Nobody wants to really own them because they haven't done tremendously. Well, with the metals prices rising, and there's no reason that they won't continue to rise aggressively, and given a pullback, then these earnings are going to drive these miners to many, many multiples of their current price over time. So that's the bullish. Take a Warren Buffett. You want to buy when everybody else wants to sell. So most people have had capitulation. Yeah, they wake up a little. Oh, gold's at an all-time high. I get comments out there. Well, why would I buy miners right now? Gold's at an all-time high. I want to avoid it. It's probably going to retrace. And I said, well, you don't understand. The miners aren't at an all-time high. They're at an all-time low on the value versus the metal. So what do you think they're going to get paid when they mine gold and silver? They're going to get paid much higher than they've been paid before. So that, compared to their mining cost, is going to drive their earnings up substantially. So again, done. But I like to educate, so if you didn't want to hear this, when you're hearing it, just move through. I know a lot of people do want to hear it. All right, so on our holding, doing very well on our weeklies, right? We're doing really relatively nothing. We're pretty flat. We even moved down a little on 6/11, but that was a crazy day. A lot of things were down. So 1858 is fair value. 1858 is fair value based on share count and NAV. And what did we close at? 1858, again on 610. So we've captured 47%. Now, we're leaving a bigger hole here. And by the way, I got to go back. These aren't accurate, the 5 and 6 numbers. But my 7 and 10 numbers are accurate, so I'll fix these. But don't worry about the exact. We are setting with a deficit here. And what do we really want? We want to move up. But since it's 719, I'm really not worried. All right, so here's our 3 weeklies. So with one trading day in, but now I can tell you when I do 611 that we drop down a little bit. We're in the 33s. So we're not much danger, with these 3 trading days to go. Now, the big one is only 2.85, but it's higher now after 611. I'm still going to do the video. All right? We're still in this bull flag flying. This is the pole, this big run up. And like I said, this could go on for weeks or a month. But I fully suspect that it will, Friday's my test. I feel like either Thursday or Friday will be the lows, okay? And we've got all the CPI and FOMC and all that coming up. But I think that Thursday or Friday will have proven to be the low, and they'll start to move up. So let's see. It could go the other way. No guarantees. I don't buy things based on what they do in a single day. All right. So final is, let's go to the payout. All right. So again, this hasn't paid out yet, right? So it collected $1.07 in its May activity over, 14, I think, trading days, something like that. When I moved these out, there was something like that period. And actually, these two count toward, I cut off after 6.3. Again, Jay mentioned on a thing that they kind of do a calendar basis, but it's all in the wash of how you account for this stuff. So back to the payout. So far, we've collected a total of 29 cents, and 20 cents of it is in our short call category, which is always positive. Not much money, okay? I agree. But what's ahead is going to help us. And we don't have that requirement that we have to roll to cover something. So again, I don't expect this to be a big payer with its IV right now. It needs to wake up and move, and once it does and has some blowouts, and that can happen, trust me, then that's where the bullishness is, right? I mean, other people jump in, the cryptos are still hot, they sort of tested support yesterday. So let's see what we got. I mean, you can tell that by the share count, right? People, even in my view, you might want to buy a Yieldmax right now before you buy this. But the smart money is getting in and buying this stuff up cheaply. Could it go a little lower? If you bought it at 18, could it go to 17? Sure, right? Is it going to go to 10? No. Is it going to go a lot higher over time? Absolutely. Okay. So that's what I've got for you. We can take a sneak peek here, and you see what I'm talking about, right? We're still in the mode of where we collect more money, but we have this 651, but it's dinky, but it's not necessarily dinky in this fund because everything's low. But you see, we're just steadily collecting money in here. So if people buy into the fund, they're going to generate more cash and can put more positions in. But I think the fund needs to do something to generate. So it's the catch-22 scenario. Okay, that's what I got for you, folks. Have a good evening, and I'll do another GDXY and get the others out tonight or tomorrow morning early before trading. Okay, see ya. Bye.